Yeah, I'm losing my edge.
Is the election over? No, unfortunately, it is not. But fortunately, the election trade is not over either, and this is a trend that I want to dive into for stocks because foreign exchange and commodities, those are movers that we love for their randomness off of elections, but just not seeing any sustained movement there. We are seeing sustained movement in equities, and it's not it's not abnormal to see sustained movement in equities. We've seen in 2004 and in 2008, 2012, and 16 a good amount of stock movement after the fact, and it's corresponded to a slightly more bullish tone after the election. Looking at the 2-month range after the election, and then all 2-month ranges in the S&P 500 for the last 2 decades, slightly more bullish, Pete, but actually at the end of the day, nothing outside of the norm. We looked at these numbers relative to the day after the election, and we usually see a spike in volatility the day after the election, which you could imagine is true. But the next 2 months actually trade like normal. And how do you feel about the fact that the range in equities is give or take 6.8% in the following 2 months after an election? Today, the day following an election, we're already up almost 5% in the small technology futures here at the small exchange, and NASDAQ futures already up almost all of this range that we're supposed to have for the next 2 months. How does that make you feel?
You know what? I think it speaks to, and in conjunction with some of the other things we've been talking to about non-dislocation, I think, you know what, a lot has been compressed into a short amount of time. So is it an opportunity? Absolutely. I think this presents itself. And I love, you know what, that was a very concise explanation of, you know what, here's all this movement that has been compressed, almost all of it into the period of 24 hours. That is a trader's, that's a trader's dream, is to get, and I don't know if, 11,800 is going to be the high in NASDAQ, or if we're going to see sticks that 5470 level is the high. But we've gotten so much movement in a short amount of time. I think while maybe, and as I said, we possibly see higher prints at some point in the next couple of days, there will be enough back and forth off of this compressed move that will give you a lot of interest. If you're looking for sticks to give back all 200 ticks, I think you've picked the wrong trade. Sure. If you're looking to be able to, and I think be able to put on comfortably a couple of units and manage, if you really want to lean, hold on to one of them or two of them for a longer down move, but manage the bulk of them within a reasonable scalping range.
Yeah, this is the scenario where the election is not over. They're still counting votes, and the current president has a lot to say about that process, and that likely won't be over in the next couple of hours or even maybe the next couple of days. And while that affects us as just like human beings here, is increasing anxiety, it is also increasing opportunity for trade. And the fact that, and I just had to correct this number because I put these slides together a couple hours ago, Sticks has been as high as 5%. Earlier it was 4%, and now it's actually built another leg on top of that. The 5% rally, the range that we've seen historically after elections, for 2 months worth of range being 6 or 7%, already getting almost all of that in the day following, and coinciding with this is probably the most probably the best that society and the economy has felt about the election in the last 24 hours. I think
that's a great point.
That all coincides with some give back. I agree with you. We're back to these highs in sticks here in one shot. And that's a lot on a daily basis. That's a lot historically. And I think no matter what happens, whether the election ends, all the election process ends in the next 30 minutes or it ends in the next 3 days, I think that there's some give back to be had, especially in this sticks market, because you look at a rally, no matter if it's blue or red here, and you're seeing in recent elections a day after a move that's 1 to 3%, depending on how volatile it is. And remember, the data points some of the data points that are skewing this is the fact that Obama was elected, a Democrat was elected in '08 amid a stock market fall there. And so, even some of those absurd large election moves, not as large as the one that we're seeing today at 4.5%, 5% higher in equities. And, this begs the question, do you think this rally is too much given these historical standards here?
You know what? I think it is to start being engaged in. Is it too much? Well, we'll look back like, oh, I should have had these on. You know what? I think whether it's here or honestly, think about this. So we had a 5% up move. The extreme we saw was 3.5. The average falls somewhere well between a skosh under zero. So we've had 5% in a day. The only thing I feel relatively certain about is that you will have even if you didn't get engaged and the market ends up falling off a little bit and we're up 4.25%, 4.5%. You can't say, well, I missed the up 5%. The 4.5%, the 4% is still an outside day by a marked amount. So don't worry about pinning the top. I know the frenetic pace of these moves makes you a little bit inclined. You will always get run over. What I mean by that is you're never going to sell the high and the market's going to roll. I mean, once in a while, hey, everybody throws a dart perfectly, but be comfortable that your size is small, you're using the right product, and you realize that there's a lot of elasticity in pricing right now. So take advantage of that. And that elasticity means the market may move if you want to sell futures, may move through you to the upside, but equally, we're seeing the elasticity to the downside here. We just saw a relatively, a 20-point release in sticks, a 50-point release in NASDAQ. So you're not missing opportunities to trade on both sides of this.
Yeah.
And I think we've loved above 30% here for so many trades that have actually worked very well for us. We're getting served up the same thing once again.
Yeah, I think there's a few things going for the technology stock bears here. One, the outlier daily move, 4.5% higher. I don't think we've gotten that this year, even counting the bounce off of the March lows here. I don't think we even got a 5% up move then. Huge high daily move back to those historic highs. We're right there at those highs that we saw before the election, the all-time highs in technology stocks. And then 3, the election is not over. Yeah. And if something crazy happens here, I don't know what could go from right now, depending on where you're looking, the chances of Biden pulling away in this election are right now at around 75, 80%. And now I don't see how a shock to those numbers, a flip of those odds and a shock to the markets coincides with another 2% higher in technology. I would imagine that at this stage, if something does shock the election and thus shock equity markets, I don't think it's going to be to the upside. So I think a lot of those playing on the side of those technology stock bears. Now, if you want to get short sticks, alone, that is an option. If you want to get shorted and buy these underperformers in SM75, we're seeing underperformers in financials and industrials. That's a fine way to trade. You can lay that risk off in other places, but right. I do not think that this trade is over. And Pete, you outlined it very well. In the next coming days, have your strategy, have your bias, if it's short or long. Also, you could be wanting to trade from the long side and just say to yourself, oh, they're talking down this market so much. That could also work towards your benefit of looking to, get out of my long positions up here near the highs and look to get long again at better prices. I agree with you, Pete, that the election trade is not over, and that could be good for both sides, no matter what your opinion is. Just be looking for that back and forth that is absolutely going to come.
You're you're spot on. And I love the fact you hit on, we hate to remove sides of the trade in our toolbox, whether that be premium trades or directional trades. So in other words, I'm in a box, all I can do is sell. So where's the good level to sell? Well, it's the new highs. And that when you strip out all the opportunity, you don't like the pairs because you've invested so much on one particular trade on one particular side, you've really boxed yourself out of opportunity. So I love the fact that you mentioned Well, it is a 4.5 to 5% up day right now. A pullback, if you are bullish, to 3.5 or 3.25%, which would be a sizable, a percent move to the downside. If you have a long bias, there's a trade to be had there within the range for today.